In this next short video, we're going to be discussing how to evaluate mortgage products, and I'm joined once again by Mark from Property Tribes Financial Services. And Mark, I think landlords, they like to get a bargain, they like to keep their costs down, and very, very often when they're looking at a mortgage product, they will just look at the interest rate and be looking for the most competitive interest rate. But really, there's a lot more to evaluating a suitable product than just that, isn't there?
There is, absolutely. It is a big danger, and it's something that we've always sort of had a problem with in the industry, in that people are very much headline driven. And as far as lenders have been concerned for many, many years, you will see that there are rates in newspapers and leaflets and that sort of thing, which are headline grabbing rates. Now, you have to remember that to actually get those rates, you need to go through a qualifying process. So the first thing is you really need to know what that qualifying process is. So speaking to somebody like myself, we understand what that qualifying process is. We know whether somebody can actually get that particular rate. But taking that headline rate away, it's really down to the individual and what's most important to them. Some people will be completely rate driven to start with, and they'll think, right, the deal I want is the lowest rate. It has to be the lowest rate because that will be the cheapest. That's not always the case. The lowest rate isn't always the cheapest. What we will always do, and what you've got the opportunity to do via the website, is you can source the particular mortgages, but we will always source on the total to pay. So how much will it actually cost you over a predetermined time which is best for you? So, for example, if you were looking at a 5-year fixed rate, you may want to say, what's going to be the cheapest for me, including all the fees, including everything that might cost me money, how much is it going to cost me, what will be the cheapest over the 5 years? We can source that for you and tell you that the cheapest over the 5 years will be this one. Now, it may well be that the actual rate that you pay on the cheapest one will be higher than a rate lower down, but the fees could be higher on one and lower on the other. And some people believe that they're completely rate driven at the beginning, but actually it's not that at all. It's about how much are they actually going to pay over that period of time.
Quite. We
can do it over 3 years, 5 years, 20 years, whatever term they want. So whatever circumstances they have, if they turn around and say, well, actually in 3 years' time, we think we're going to do this, so we'd like to know 3 years, we can source it for 3 years. They can source it for 3 years. So you can always see the right way and the best way of actually working out what the best rate is for you, rather than cheapest rate, which, as I say, very often is not the right rate for them as an individual.
No, I think you've raised a very good point there, because sometimes you'll see a headline rate, but it turns out that it's only 60% loan to value, meaning that you've got to put in a 40% deposit, and you may not have that. So it's really, Mark was referencing the free mortgage sourcing tool that is on the Property Tribes Financial Services.com website, where it's constantly updating with the latest products and so on. And then there might be other things like the rental stress rate. Might not actually fit with your property's achievable rent. So
criteria is absolutely essential, and what most people don't understand, and what you can't see on these headline rates, is the criteria that sits behind it. And even for ourselves who deal with the lenders on a daily basis, the lenders will print certain bits of criteria, and you can see certain bits. It still doesn't cover everything. So having that knowledge of exactly what all the criteria is absolutely essential, and that's where having the conversation with somebody before they start this property journey is essential, because there are times where somebody will come to us and say, well, I want that rate and I want to borrow 90%, and I haven't got a tenant yet, and all of these various things, and then we've got to sort of bring them back and say, well, actually, you need to start all over again, because this is where we are, and this is what you can get. And for us, it's coming up with the very best rate and the very best deal for that particular individual circumstances.
Fantastic.
And to be honest, we can meet 2 or 3 people with very, very similar needs, but they will come out with 3 different products, because it's what is suitable for them, and that's the key really. We can find the most suitable product for you and your circumstances now and in the future, rather than let's pick a headline rate.
Quite, and we all know that property investment is a long-term strategy.
Absolutely.
And it's best to think long-term,
Yeah.
not short-term, and not be driven just by that headline rate.
Absolutely, yeah.
Fantastic.
Absolutely.
Okay, well, if you've got any questions about evaluating mortgage products, please drop them on this thread and Mark will be happy to answer them. But we hope you've got some good insights from this about how important it is to look at a much broader picture than just the headline rate when you're deciding which mortgage you're going to go for. And of course, Property Tribes Financial Services can help if you need. Thank you for watching.